What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna, the best trade idea resource out there. All right. What's up, everybody? Happy Thursday. Let's go. Time to rock and roll. I see Austin saying, let's go in the chat there. I see somebody already throwing out snow, ticker snow. That's one of the handful of winners today. There's not many hot stocks that are winners today. Snow is one of them, up 10%. And are we going to be streaming J-Pow? Yeah, I think that we are. Spencer Israel, are we going to be doing that? Having Powell on? Potentially in the background where we can, sort of watch together or cut over when he's making some interesting comments. That said, I don't expect anything that he is going to be throwing out there to be super interesting. We'll see. But all right, guys, jam-packed show as always today. I'm going to start us off with the intro, and then I'm going to talk through the agenda. And while I'm doing that, let's get some calls kicking. Let's get some energy going. We're coming off the high of having Kathy Wood on yesterday. Let's keep some of that energy going. But all right, guys, the reason that we do this show, the reason why we spend these 60, 120 minutes together every single day is because we want this to be the best trade idea resource out there. That's what we're going for. I love seeing people already in the chat throwing out tickers. We want ideas not just come from myself, not just from Jason, not just from our guests, but out of the whole community that we have. That's all of you out there in ZingerNation. That's what we're going for. And then again, what we've got on deck today, I made one trade this morning. So we'll talk about that. I want to talk about some of these crypto stocks. There could potentially be a crypto stock opportunity today. We've got a lot of the crypto stocks selling off while we have Bitcoin holding up. So we'll talk about crypto stocks. We're going to have the CEO of Coro Global on. We're going to have the CEO of EXPI Holdings on. So two public company CEOs coming on the show, hanging out with us. So that's what's up, guys. And if you guys saw the Kathy Wood interview yesterday, throw me the one in the chat. I want to see all those ones flying through. If you missed it, drop the two, and if there's enough, we'll get another link in here. But we did that for you guys, right? We would not have brought Kathy Wood onto the show if it wasn't by popular demand. You guys literally followed up every single day and said, can we get Kathy Wood in here? Kathy, when's the interview? And so we got her. And let's talk about who's next. I saw somebody throw out Chamath. We've already had Chamath on here. We could do Chamath again. If there's other big targets for us to go after, drop the names in there. Because again, this is Benzinga, baby. We're trying to do it for you guys. We're trying to make it actionable. We're trying to make it fun and just go from there. But all right, producer Rohan, let's get that phone number up there. Let's get some of these calls in here. And guys, drop into the chat what tickers you want us to talk about today. I think that we're gonna have some time. So I got, look at this. I got the notepad. I got the pen. So I will be jotting those down because again, I just have one trade so far today. We'll talk about it. But it's not like I've got a crazy number. All right. Okay. Here we go. We should do GME. I see somebody dropping in the GME. We have not done that one in a little bit. So that might be a good one to hit. And while we're waiting here, guys, all right, let's talk about this initial trade that I made today. I'm going to add my screen on to the stream here. All right, so here it is. Sort of a boring trade, but I think a really important trade. What I've been finding, guys, is that when we're having these down market days, I'm getting my ass kicked in the live portfolio, right? The live account, my Interactive Brokers account that we show every single day on this show. Right, we pulled up, we go through all the trades. Every day at the market, it has been down. I've been getting my ass kicked on there. So I'm nervous a little bit, and so I did a little bit of hedging, and so what I did was I went ahead and I rolled my SPY puts over. So if you guys recall, last month I bought 350 strike puts on SPY. Here, let's get a 1 month chart on here. All right, here we go. When we started getting some of this choppiness, right? I bought some puts on SPY 350 strike expiring on the 19th of this month. That's only 2 weeks away now, so starting to come around to sooner than later. And we'll start getting a lot of that time decay in there. So what I did is I rolled my puts forward another month. And so now I have the 355 April 16th SPY puts. So that's what I went ahead and bought today. I bought 3 contracts, and basically the way that works is it hedges away. I mean, let's do the math really quick. So if it's a 355 strike, all right, we have 3 contracts and it's 100 shares per contract. So that basically hedges $106,000 of my portfolio. So it's a nice big chunk of the portfolio that we're hedging away there. Just writing down some tickers. And so what does that mean? Let's talk through it a little bit. So that means that if SPY has more than a 10% correction, right? I bought my puts right around that 9-10% correction mark. Every dollar that SPY drops below that, 100 grand out of my portfolio is hedged against that, right? I'll be making that back. So there was the move there, guys. Again, I've been getting my ass kicked, as I imagine a lot of you have, when we have these market down days. And the reason why is because I've got a lot of exposure to what I call not super high quality stocks, but a lot of these Momo runners and a lot of these swing trades that have been making us, a shit pile of money all year long. But that's been the move. All right, and Rohan, we've got nobody on the phone lines today. What the hell, guys?
Yeah, I'm pretty disappointed with this. Like, I got the phone number up for a long time, and not a single call has rolled through. Now, it might be the app, but I'm pretty sure it's working just fine. So
I was about to say, that's got to be a technical difficulty. I mean, as soon as we put that number up, we get like 10 dials. This is your chance to come on, pitch a stock, ask a question, tell us you want to talk about. So tell us that we suck. I mean, whatever. I mean, that's
tell us that I suck.
This is the fun. Yeah, exactly. Tell Rohan that he sucks. I mean, this is the fun show for that. And a question out of the chat from Keith talking about rolling over the puts. Yes.
There we go.
All right, let's grab one.
Hello, you're on the Power Hour.
Hey, I was wondering if Luke could talk about the Palantir. I'm not sure if he's still in Palantir or not, but I'm thinking about getting long here, and I was wondering what his take on that is. I'm not sure if he covered it or not yet. I just tuned in, so.
All right, let's do it. Let's talk Palantir. So this is a stock that I've been selling puts against for months, right? Every single month, I've just been selling puts against the stock and collecting the premium. I had not been assigned shares until very recently. I sold the 20, what was it? Maybe the 24 strike puts for around $2. And so I picked up shares for effectively $22 a share there. Again, when I love selling puts, it's key to my strategy. What I do is any stock that I'm okay owning for the long run, but I think that the price is high or that it has potential to go down, I'll sell puts against that stock. It makes me synthetically long, so I'll collect premium into the account today. And then the risk that I'm taking on is I have to buy that stock for some predetermined price at some point in the future. Right, we've been doing it on Bill.com all year. We've been doing it on Palantir all year. There's a handful of other tickers that we're okay owning. We think are expensive and would be okay buying them at a discount. So I did just get assigned a couple hundred shares of Palantir here. Again, I think it was the 24 strike, and within the past couple of days, we got assigned the shares. I'm hanging out in them, and I'll show you why. So here's a 1 month chart. Check out all the support that we have in the stock around the $23 level. I mean, these are intraday candles that we're looking at, and it just keeps bouncing up. It's catching a buyer, catching a buyer, catching a buyer, catching a buyer. And then you see so much rallying around the $20 psychological level, right? So I am holding on to this. Right? Go ahead.
We also have a lot of overhead here at like 25.50, 25.90. So, I mean, I guess it's like a lot of pent-up consolidation, you could say, on that daily. So it's kind of a wide range for a stock like this, like 3-4 point range, right? So what are your thoughts on, like, you know, if, let's say, like some Kathy headline comes out that she, you know, aggressively bought it today or, you know, whatever it may be, do you think that that's enough to send this upwards even in a downtrending market, even if our SPYs and Qs sell off?
So this is a stock that we've seen be super sensitive to news, and not just like Kathy news, like she's buying more shares, but just news sensitive in general. Whenever they announce a contract, I mean, even a small contract, like a $10 million contract is a small contract for a company this size. I mean, it's a $44 billion market cap right now, right? The stock has been popping. So yeah, I think we'll probably need some sort of news to break us above, that 25, 50, 26, call it somewhere in their level. But I mean, those are the numbers that I'm watching, right? You've got 23 on the bottom, you got 25 and a half, 26 on top. If either of those get snapped, then I'm sort of in trouble. I'm looking out, but that's where I'm at with it.
Yep. Gotcha. Great. Thank you for that. I appreciate it. And of course, the show and everything that you guys are doing. Love the show and the streams and everything. So thanks for answering my question.
Hell yeah, man. Thanks for calling in. What's your name in the chat?
My name is Shiv.
There we go. All right. Round of applause. There we go. All right. We're all at home. We're by ourselves, right? It's a little bit weird to be clapping to yourself and, but yeah, get some blood flow in the fingers, make you a faster typer, that sort of thing. And of course, it'll make you a faster like smasher, guys. Hit the like on the stream, share this stream. Let's get it going. I think that we're probably going to move back to that all day stream. I'm itching to, but like it, share it. Let's get more people in the power hour. Let's get more people on ZingerNation, and we're going to keep rolling through this thing. All right, producer Rohan, we have anybody else on the line right now?
Not right now, but this is your chance to call if you've been waiting.
All right, then I'm going to keep rolling. A stock that we took a position in yesterday I want to talk about, and I saw this one out of the chat as well. Fubo, ticker FUBO, Foxtrot, Uncle Bravo. I'm sorry, it's probably ukulele for you. Bravo, Oscar, Fubo TV. This is our streaming stock. We went also synthetically long this one yesterday too, via selling puts. So what the trade was we sold the 29 strike puts for I believe the month of April. We collected a $1.56 premium right away for selling those puts. And the stock's getting crushed today, just in the same way that a lot of these, nice Momo stocks, etc., are getting crushed today. Yeah, like Clover is another one that I see in there. Let's talk about Clove as well. Writing that one down on the list. So Fubo, news out yesterday after the close, got us a nice little pop. Here it is. I'm going to zoom it in on my Benzinga Pro here. But all right, Fubo TV shares pop on Caesars partnership. Wait, we need a better headline than that. There we go. All right, Fubo reports secured market access deals for its Fubo Sportsbook in Indiana, New Jersey through Caesars Entertainment. So they got to deal with Caesars. That's great. It opens up their betting platform for more states. Again, we went long Fubo following some of their earnings weakness. Basically, the thesis on the stock is that they put out amazing guidance. The multiples aren't crazy on this thing. I mean, the stock's growing at 70-80% a year on the top line. And it's only trading at, what was it? We did the math yesterday, 6.5, 7 times price to sales. The reason that the market didn't like that earnings report is because they said it's not going to be until Q4 when they get their betting platform launched. If you're not familiar with the betting platform, basically it's going to be a way for you to stream sports content live, also make bets there, right? It's sort of like what we're seeing in these Pens and these DraftKings and these sorts of things where they're opening up their sports books in more states. So that was the move there with Fubo, or I guess rather that's what the company is. That's what the company does. So basically we said we're going to sell the 29 strike puts. We're going to collect that premium right away. And essentially, if we get assigned shares of the stock, right, it goes below 29. We're accepting shares of the stock. We're buying it for 27.5. Price I'm super comfortable with because that's basically trading inline valuations with Disney. And the stock's growing at 70% a year versus literally 5.5% a year. So that's the move there on Fubo. It is getting cracked again today, like I said, with the rest of the Momo stocks. Obviously not great for after we put a trade on, but
I'm not sure why no one's coming in to give you a programming note, but I believe the Fubo CEO will be on the pre-market prep tomorrow at 9 a.m. tomorrow, or between 9 and 9:05. Just letting you guys know. so you don't miss out.
All right,
That's what
that's some
Benzinga
rockstar
does.
news.
Yeah,
And Jason, was that one? What was that one requested by the community? Is that where that came out of?
Yeah, absolutely. The community, we are the community. ZingerNation, we are one. We are one. It's not us versus you. We are one. Kathy Wood, you guys wanted. We got her for you guys. You want Fubo CEO. We got her. And we do it as a community. We reach out together, just like you're going to get us on DirecTV, guys. We reach out as a community. That's it. That's it. That's it. That's it. So keep up the good work. Let's do it together. And yeah, Fubo CEO at 9 a.m. after I'm on the pre-market prep at 8:45 or 8:40.
There it is. So there you have it, guys. 9 a.m. tomorrow. Let's get some clarity on the stock. Let's talk about the gambling platform. Let's talk about more states. Let's talk about more partnerships. Fubo,
Luke,
what?
We have a special guest though right now.
Oh, do we? Okay.
Yeah, can I do my thing real quick?
Yep, let's do it.
Hold on. What's going on?
If that happens,
see,
then
there he is.
There he is. All right.
So Jerome, do you believe inflation is happening right now?
Anchored at 2%, which gives us the ability to do all of the things we do when the economy is weak.
Yeah, but I hear you. I mean, I hear you, but it could take a while for this to happen. I don't understand why you're saying this, Jerome, because inflation is hurting the market right now. And look what's going on in the real estate market
now.
You know, look, like what's going on in the real estate market is just, you can't buy anything right now, Luke, or even the hotels. Like if people are traveling, they have extra cash. It seems like
for the tapering asset purchases has an element of judgment in it. But I've also said that we will
because they have that extra cash, they probably are able to taper the asset purchases. It makes sense.
We'll communicate about our sense of progress towards substantial further toward the goals, substantial further progress toward our goals. So we're not looking to surprise people with that. And as far as the the rate liftoff guidance, it's pretty specific. And as I said, it will take some time to get there. If you think about it, you've got to have a very strong labor market and inflation performing in line with it's a picture of an economy that is all but fully recovered.
All right, Jerome.
And
Jerome,
the sooner that happens, the better.
It just seems like you're going a little long. We're going to go back to stocks.
That's going to take some time.
I hear you, but let's go back to stocks. All right, so you guys are talking about Twilio being down $100. VUZI. Why is VUZI? Why does everyone talk about VUZI so much, guys?
I don't know. What is this? Do you know what the company is? I don't even know.
Yeah, I know, but I don't really know what they do. But they must be some crypto.
All right, here let's get the screen up. Here.
I got it. Look, I got it. Luke.
You got it.
VUZI.
VUZI. All right. Here's the description. Smart glasses and augmented reality technology. So it's definitely a hot sector.
And then what time is Gordon Johnson coming on?
Gordon Johnson, 12:45, I think.
Okay, so yeah, I should have asked Kathy about VUZI. They really, really loves VUZI. Yeah, the market is taking.
You know, what the other one I should have asked you about was Palantir. We got so many PLTRs in the chat.
I'll tell you why I didn't.
Okay.
There was good reason why I didn't ask her about Palantir.
All right. Let's hear it.
Because I just listened to all these interviews with her, and she talked about Palantir. When they asked about Palantir, it wasn't interviews. When they asked what she was talking about stock she owns, and she talked about Palantir, and she went on for like 6 minutes on it. And so I was afraid to ask and get that, you know what I mean, like 3 minutes, because I knew it would take a long time. She really likes Palantir, thinks it's not just for governments, for other enterprises, etc. That's the reason I didn't do it, because I heard an answer about it, but I know there was a lot.
Yeah, I mean, and if she's talked about it ad nauseum, then there's no reason to ask the question, right? Let's get some of these other tickers out there. Yep.
No, we're not. Gordon Johnson's not coming on. We're joking. All he does is yell. We know. Says I yell, but he knows. So they're going to get into AR. Okay, so the people do want Gordon Johnson back on a little bit. Not Gordon Johnson, Jerome Powell. All right, Jerome. So what do you think about the economy right now?
The effective lower bound, which is our technical name for zero or close to zero. We provided really strong guidance about the conditions we need to see before we considered raising it. We're buying $120 billion in treasuries and mortgage-backed securities across the curve, and we'll continue at least at that pace until we see substantial progress toward our goals. Financial conditions are highly accommodative, and that's appropriate given the ground that the economy has to cover.
Can you guys not hear the video?
It's always the case that if conditions do change materially, the committee is prepared to use
No,
the
I
tools
think
that
they can hear it.
foster achievement of
If they could not have if they couldn't hear the
Well,
video
and
for
if
this
there
long,
were
somebody
some
would have
kind
said
of rate
something
move
before
that
Adam.
you felt represented a threat to your outlook.
Yeah.
What would you do to address it?
Well, that's a sort of hypothetical situation. You know, we would use our tools.
So
hard to
I
say
don't know.
in the abstract,
Here's
but,
I'm gonna
we
pull
would
it
use-
down for a second. But here's my J-Pow rant about this segment, right? And I know that like FinTwit's been ablaze with people waiting for it to hear him speak and that sort of thing. He's not going to give us anything new, right? I mean, is there any communication that he hasn't already delivered that he's going to deliver in this interview that he wouldn't have already done through a like an official channel? Right. I mean, they issue press releases, they issue statements, they do media talks, right? They do Senate briefings, right? There's nothing that's going to come out of this that isn't already out there. So in terms of impact on this moving the market, I think pretty much no way in hell. So interesting to listen to. Yes, different format. Yes, that's nice. But I don't know. That's my take on it.
Has been making over the last year to your framework. What does it mean for everyday workers?
Great question. So I guess I have to say, for a long time, and when I was entering the job market years ago, when we had low employment, we had high inflation. So when the job market got good and tight, employers were, actively seeking people, and there were plenty of jobs, inflation would be moving up, and therefore the central bank, the Fed, would be raising interest rates to cool off the economy. And I would say 50 years ago that was appropriate because there was this tight connection between unemployment and inflation. More recently, though, that I think the Fed established its credibility several decades ago on inflation, and since that time, the connection between having a lot of people out of work and inflation under control has gotten very, very weak. So our new framework very explicitly takes.
All right, I'm pulling Powell down, Jason, for a little bit. But let's hammer through a couple stocks before our 12:30 guest hops on here. We can put him back on if you want. All right, let's vote it out. If we want to watch J Powell, throw a 1 in the chat. If we want to talk some other stocks, throw the 2 in there. Let's see where everybody's at with it. But I want to point out at least one. Tons of comments about this one in the chat. Bringing this up for an awareness item, Tesla, ticker TSLA. You probably don't need to be told that ticker, but there you go. I read it off anyways. These are daily candles that we're looking at, guys. All right. Yeah, there we go. Yeah, we got a lot of 2s in there. Okay. But all right. So here are the daily candles in Tesla. I zoomed in a little bit on this chart here. Check out this low.
The community wants Powell.
Who does?
Oh, 2 is no Powell. Okay.
2 is no Powell.
My bad. Let me keep going with what you're doing, Luke. My bad.
All right. So Tesla, I saw some comments about this one in the chat. Like I said, we have some time for some chat tickers today.
You are fake news.
Check out the lows in this stock. Right. We've got this low down here, February 22nd. Right at what is it? 619, 620, somewhere in that range. We bounce clean off of that low. It looks like we're running into it again. I'm going to zoom us into a 2-day chart. Yeah, there it is. So there's a nice clean bounce off of that. Running into there again. So keep an eye on that level. If we're either going to bounce off of it or probably smash through it. So if you're in the stock, if you're trading the stock actively, keep that one in mind.
I mean, I sold and I bought some puts on it. I have it. So let's see what my puts are. Let's see if my puts are up or down.
So tell me if this is accurate for your Tesla position. You're long-term bullish on the stock.
Yep.
Short-term medium, short-term bearish.
I'll give you my trades. I'm no liar. I'll give you my trades. All right.
Let's hear it.
No, I think it could go to like 550. So that's you have to remember it's split 5 for 1, Luke. So 550 is $2,100. Is $2,800, man. So it's right now it's $600. It's still $3,000. I mean, that's fucking gigantic, you know. And so my executed trades on Tesla, I started selling at let's go back further. Okay, so I started selling Tesla at 788, 810, 855. It was at 855. I sold only 2 shares though. And then I sold some call. Then 840, 847, 840, 876, 870, 860, 860, 860, 790, 768. Yeah. So, but not enough in terms of how much has gone down. And then I sold some today at 635. Okay. And then what I did is I bought puts, 580 April puts, or 600 April puts, or March, March 28th puts at 660. Those were my hedges. And so, Tesla has I look, what's the next catalyst? The semi is being delayed.
And you know those catalysts better than anybody. So what is it? I'm actually curious.
Well, I don't know if I know better than anybody. I won't say that, but I don't know if I know it better than anyone, but I would say, like, they just came out the new Model S and Model X, the new design. Model Y, they're going to be producing in they're going to be able to have it in Berlin because China is almost up, and then also they're going to be able to ship to Norway again. That's why they're not number one. They weren't shipping to Norway at this point, and so they're going to be a lot more years.
So that's what gives them the leap. They open up Norway.
Yeah, and then
going to move.
And then there's also, Tesla Semi got delayed because of the cell technology. There's a lot of things that aren't into the stock right now. But, like, when do those catalysts happen, Luke? When do they happen? Is it this next quarter? Is it that, is it when do those happen? So we need them sooner than later. So I've just trimmed down. I didn't do it right. I should have, those positions, those sell points that I gave you guys, if I had 1,000 shares at that in the 880s, I sold 5% of my position in the 80s. In the 700s, I sold another 5%, and then I bought some puts. That's what I did.
All right, and let's play this game. You brought it up, right? You're mentioning the prices, pre-split adjusted prices, just generally the size of the stock as a whole. So let's play this game. We haven't done it in a little bit, and it's a little bit harder now. But there are 7 stocks that have a larger market cap than Tesla. Whoever can put all 7 of those in one message line, right? So do comma space, whatever. Put all 7 in one message line. You're going to get whatever you want from swag.benzinga.com. That's swag.benzinga.com. I see Mr. Caesar's got the link in there right now. But it was 4 a couple weeks ago. Now there's 7 stocks that have a bigger market cap than Tesla. Who can guess them accurately?
And Luke, I'm at my lowest margin I've ever been right now.
There you go. All right, there we go. Another air horns for that one.
For what?
I don't know. I bought puts. I'm feeling toppy on the market.
Oh, I should buy the S&P 500 puts. I never bought those again. Remember you had me in those a while ago? How do I do that? SPY? Is that what you say?
SPY. That's what I did. I did SPY. I did 355 puts for
let me do it.
April.
Should I share? I know you have a guest, but should I share my screen and do the puts or what?
Yeah, let's do it real quick.
Okay, share my screen, Chrome tab, E-Trade. Okay. All right. So what do? I hit options.
Yep.
Okay. Puts. What price?
I did 355.
355. You did April?
I did April 16th or something along those lines. It's somewhere around there.
Whenever I do, I'm always a month off. I should always, I think I need to do extra.
And go further out. It just makes it more expensive.
I know. I'm not silly like that. So what'd you pay?
416, something like that. $4.
When did you do this?
2 hours ago.
It went up. Okay. All right. So I'll do what's it at right now?
Nobody's trying to take a guess as the stocks that have a bigger market cap than Tesla. That surprises me.
No one can take a guess.
No one take a guess. We got a slow moving chat today. We need to light it up. Maybe our next guest will get
maybe they're tired. We had the whole Kathy Wood thing.
They're tired. They're sick of no all day stream. Oh, or the stream is actually maybe behind because now we're getting answers flying through.
All right, I'm doing 548 1600. Go. Is that good here? Let's see what happens.
All right. All right. Yeah. Are you hitting it? Sorry, I've been reading these. 1, 2, 3, 4.
I hit it.
Boom! There we go.
It executed. It
Running
executed.
the
I'm
cash
live.
register.
I'm in it. All right. I want to go listen to the live press conference right now for one of the mortgage companies.
All righty. Well, I am going to bring David Dorr onto our stream, Jason. We'll see you in a little bit.
Yep.
All right. CEO at Coro Global. David, what's up, man? Welcome to the Power Hour. How are you doing?
Thank you. Nice to see you. How are you?
Doing well. You know, getting my ass kicked in this market a little bit today, but you know, hey, it happens. So, what's up with you?
Oh man, working hard, building the business, growing our company, and been deep in the weeds on that. Long days and nights, but enjoying the journey.
There we go. All right. So tell us about the company. Tell us about the product, etc.
Yeah. So a quick snapshot on us. We're a fintech company headquartered in Miami, Florida. That's the company right there, Coro Global. And what Coro Global does is that we are a money transmission business that allows you through a mobile app to be able to transact and transmit dollars, and most importantly, to be able to transact gold. And this is very important because you see all the enthusiasm that's out there in the crypto market right now, and Bitcoin, of course, always stealing the headlines. If we historically look at why Bitcoin is interesting to people, it's because Bitcoin holds the promise of functioning quasi like a digital gold. Well, for us, we think that you can do a lot better than that. Number one, from a cryptographic perspective, there are ledgers that are far superior to Bitcoin. And we use one that we think is leaps and bounds better than all blockchain solutions. It's a directed acyclic graph approach, which is called Hashgraph. And we marry that with physical gold. So instead of pretending to be digital gold, you've got actual real gold. And you can transact. We're federally licensed in the United States as a money transmitter, as well as in 27 states plus the District of Columbia. And we're on our way to nationwide coverage. So for those that like precious metals and want to actually have real exposure to it, as well as being able to use it as money, not just being able to save in it, Coro's the place for you.
So let me ask you this question then. So you know, let's say I deposit $1,000 into the account. Then are you buying that much physical metal to hold like as a representation of my account, or how does that work?
That's a great question. So think of your account as a multi-currency account. So when you first download the Coro app, you're able to connect it to your bank account. We're connected to the entire US banking system. And so let's take your example. You transfer $1,000 over. That will then sit in your USD balance. So you have $1,000 in your Coro account. Now, before we even touch gold, it's important that you know that you can then send that on to any other Coro user. And what's important about this is that that settles in real time. So one of the big problems of the banking system, as I'm sure you're aware, it's the reason that people like crypto again.
The stock market has the same issue too.
Same issue, right? Robinhood got slapped with this, hard with the GameStop issues. It's a T+2 market. Currencies are a T+2 market. Equities are a T+2 market on average globally. And DLT possesses the ability to get past that. That's why we use it. So even in dollars, it's important to know that you can transmit those instantaneously. Now, let's say that you want to buy some gold. Gold is down over the last 60 days. So great opportunity for those that have been accumulating it over the last several years and want to accumulate more with anticipation of inflation kicking in. You can then buy however much you want. That $1,000, whether you want to buy $1,000 worth or $1 worth, you can click a button. You will buy that gold instantaneously through our app. It's cleared and settled in real time. And then you will see that in your XAU balance. Now, XAU is the international currency code for gold, as I'm sure you and many of your users are aware. So now you would be able to, let's say you bought $500 worth of gold, you'd see that reflected in the XAU as well as your $500 balance in your US dollar account.
Got it. Okay. And then how does the transacting with gold works? I think that's interesting because it's not like I can go to a store and say, hey, here's $100 worth of gold to buy this shirt or something like that.
Correct. Yeah, that's been the big limitation with gold. As we tell customers, it's not really whether or not we're going to have another financial crisis. The next one is coming. It's a reality. The math certainly proves that. The question is, what are you going to be able to do on the other side? How are we going to rebuild our societies, our economies? And we need stable money for that. And in order to do that, you need to be able to commercially transact. First, at least with individuals. So we give people the ability to send, receive, exchange with gold. As we continue to evolve our platform, we will create business accounts as well, so that if you want to go buy a coffee or a car, you will be able to do that transaction with gold.
Okay, got it. All right, it's interesting. And how many users are on the platform thus far, or at least ballpark it for us?
Yeah, so we've got a couple thousand users. We launched the product in August, and as I
Okay, so
mentioned,
that's where have the users come from? That's something I'm always interested in.
yeah,
A few thousand in since August is pretty impressive.
it's not bad. We're certainly happy with that, and considering that we've done barely any marketing, that's very nice, kind of feather in our cap as a milestone there. We see it from all over. So there's we have our biggest user base is of course Florida, where we're headquartered, and Florida was one of our first licenses. So this makes sense. Georgia is our second biggest state as far as users. And what's nice about this to share with you is that when you look at the wide swath of users, you would think that maybe that's people that are gold bugs, people that are, have an affinity for crypto, and there's a connection there. But what we found from doing multiple customer interviews, we're touching everybody in society, which is really actually nice. So we have a very, very, very diverse demographic of users, and we hope that that remains the case.
Okay, and I would imagine it appeals a little bit, tell me if I'm wrong, to sort of like you alluded to it, sort of that not doomsday crowd, but the crowd who like is waiting for, okay, our current financial system is going to collapse. We need some other solution. Is that fair to say?
Well, yes, that's a portion of it, kind of the modern day preppers, if you will. But what we're finding most interesting, where there's probably the fastest acceleration, is millennials and below that are intellectually curious as to how our financial system works. So my career background, I've got 25 years in trading markets as with a focus on global macroeconomics. And we're finding that.
Wait, hold on. You can't tease us with the trading on the trading show. We got to ask. All right, what assets were you trading? Who were you trading for, et cetera?
Yeah, so I also have an asset management company, which is called Dorr Asset Management. We're a multifamily office. My background is trading primarily derivatives. Started off trading commodity derivatives a couple decades ago. Then that moved into other over-the-counter derivatives. My prior fintech company was a institutional exchange for the insurance industry, and all our clients were Wall Street banks. But in global macro, we trade all asset classes, both directions, top-down approach, as you would expect. But we run approximately 70% futures in our books. And then there's, of course, equities and fixed income in those.
And are you running futures on commodities or futures on indices or equity indexes or what?
Everything. All types of futures. Yep.
Okay. All right.
Yeah.
There we go. But all right. Sorry, I cut you off. Keep going. You're talking about among millennial users.
Correct. Well, so your show's a good example, right? With what Benzinga's successfully done, and congratulations on that to you and your team. I think you guys are serving a thirst. You're satisfying a thirst that's in the market there, and yeah, yeah, and people are hungry. People want to learn. They want to understand. And so we're really focused on helping people understand, not that, hey, listen, buy gold because the sky might fall in, but what's gold's historical role, and how does that differ? One of the big things that we've been educating people on, a huge topic, is the misconceptions with how crypto and blockchain and DLT works. This whole kind of gold versus Bitcoin debate has been a really murky world for people. So we get a lot of questions about that. That's a big conversational point.
Okay, awesome. And I'm seeing in the chat, I'm guessing it's some sort of Coro representative saying that you guys are getting ready to uplist to the Nasdaq.
Yeah, I don't know if that was any of our reps throwing that out there, but yes, that is hopefully the intention. We did file an S1, so Coro is traded over the counter. We are an OTCQB company on OTC markets. You can see our filings. We did file an amended S1 at the end of January. And so, yes, our intention is to do an IPO and uplisting. So,
okay, that's exciting.
Yeah. We're very excited. It's a big deal for sure.
Okay, and then let me ask you. This is always my favorite question to ask. Well, if you had to name one thing you're most excited about, what would it be?
The number one thing that we're most excited about is that we feel that this is a product that's going to change people's lives. And when we do fall on some tough times, this is going to be the differentiator for some of those that would or would not have made it through. And so that mission that we're serving feels really good to us, and we're deeply excited about that.
Okay, and I'm going to grab this question out of the chat. It's asking about are users insured? You know,
Yeah,
are their assets insured, guaranteed?
Yeah, so one of the things we spent a long time on, and this is very common, anybody that's into precious metals, paranoia always comes up very quickly. How secure are the systems? How is it custodied? Is it allocated? So to just run through that checklist for you, yes, we're fully insured. We use independent vaults outside of the banking system. What's nice and very unique about what we do, in addition to the cybersecurity layers that we have, is that the gold that's held for customers, it's held with what are called bailment rights. So that means effectively that you hold title to your gold at all times, regardless of the amount that you hold. And that's very unique. It was a huge legal and technological and logistical lift to make that happen. And I believe we stand unique in the world for having pulled that off. But very important question.
Okay, awesome. All right, and then if users want to check it out, they want to check out the platform. What's the best way to go do that? And then also, I'm gonna layer on there a second question. How do they keep in touch with you guys?
Yeah, great question. So our main website is very simple. It's coro.global, Coro.global. You can also, if you go into the app stores, both iOS and Android, you will see our app available. And if you're in one of our 27 states, you'll be able to get into the app and start transacting with us. You can find me on Twitter. I'm David Dorr on Twitter. That's one of the most common places. And then we also recently launched a Telegram channel. So if you look up Coro channel on Telegram, you will find us there, and great ways to interact with us.
Okay, and then I'm gonna go off of Coro for a second, but over to the multifamily office.
Sure.
General macro thoughts right now. Curious where you're at with things.
I think that so our theme as a macro shop is that stagflation is a very real concern. And for your audience that might not be familiar with that term, stagflation is when you get an increase in the things that you need, the price. So let's say food and energy, and then you get a fall in the things where you might have your investments, stocks and bonds. This is a very, very, very rough environment. We last saw that in the 70s in the United States. And most people don't have a good context for how brutal that is. So you've seen that reflected in bond markets. If you've looked at yields on the 2s, 30s, 10s, 5s, everything, yields have been going up. And I think that it's very, very important for people to understand, especially traders that are long technology stocks and a lot of other equities in the market, that as yields go up, there's a lot of embedded leverage in high growth companies, really high leverage. And it does not take a whole uptick, large uptick in yields to hit things. On the other side, where we do see opportunity.
And let's explain that. Let's go through that a little bit, because that's something that's been getting tossed around a ton, but I don't think a lot of people understand it.
Sure.
Is it basically when investors are looking at like an MPV or like cash flows of these companies, and there's a significant change in the risk-free rate that's used to discount sort of those future cash flows, that's where the leverage is embedded?
Yeah, exactly. So, and you see this too. If you look at the option adjusted spreads on junk bonds as an example, they're historical lows. They're trading sub 5%. I mean, this is just that's completely insane. There's no historical context for that. So when those things go up, those highly geared companies are very vulnerable to being able to service their debt. Another example of this that I use a lot that I think is really, really important for people to grasp is that last year we hit a peak of sovereign debt, $17 trillion with negative yields. And that should be on the front, to me, that should be on the front page of every single financial magazine. Like that's completely distorted markets. So you have a lot of asymmetry when those things tip. And people think that, look, if yields came down and you and I and all of society, we just refinanced our positions, our homes and everything else.
Which is what just happened.
Yeah, which never happens. Then it would be okay. But instead, people lever up. They turn their homes into ATMs and you get HELOCs and you're just building the kindling for the next crisis.
Okay. So longer term, at least, it sounds sort of medium term as well, bearish on global equity markets.
Yes, with the exception of I would pay very, very close attention to commodity equities. Look at John Deere.
Okay.
Yeah, take a look at John Deere. John Deere.
Wait. Come on. All right. Give me more.
You're
that.
You can look it up right now.
I know. I can go look at it, but why do you like the stock? I'm curious. The ticker there is DEER, right? Yeah. No. I'm sorry. DE. Delta Echo.
Yeah. So what's interesting about John Deere? Oh yeah, perfect. So this is.
There we go. Here, I'll do a zoom out. Here's a 1 year chart on it.
Yep. So you can see steady, just cranking. And the part of this is that commodities have been underinvested in for decades. And if you look at there's been lots of charts, Goldman's put them out. There's been a bunch of charts over the last couple of years that show the ratio of the S&P 500 versus commodity index. And it's been trading at a historical highs in that valuation. Equities super high, commodities super low. And so if you think that commodities are going to head into a boom phase, and we do, and especially when you have the COVID disruption in supply chains too. So you got an extra tailwind there if you're long commodities. You look at some of the equities, you can get a lot of extra bang for your buck. A lot of these guys are going to do very well. We're very long agricultural plays across the board, both in the futures instruments as well as companies like John Deere, and we believe that that's just, it's a strong place to be. It's a good spot to be watching.
Okay. All right, man. I like it. There we go. So we not only talked about Coro, we got a market analysis.
Sure.
We got a stock idea
Yep.
and an airborne. There we
Nice.
go. All right, we're running it up. David, thanks for hopping on with us today, man.
My pleasure. Thank you guys for having me. Have a great day.
Absolutely. All right, guys. Go ahead, smash that like button for us. Like I said, this is a slow chat today, okay? Maybe we're not bringing enough energy or enough ideas. And we did talk about a lot of stocks. We did Fubo, Palantir, Tesla, SPY, and now just John Deere. I even got my special guest, Drew Levine, back in the house. Let's go for Drew. Let's get a cash register for Mr. Drew here. There we go. Now we're talking, guys. And somebody's saying, what the hell, guys? You're buying SPY puts and now talking gold stocks? Yeah, all right. Every day at the market's down, I'm getting cracked, and I hold 70% of my assets in ETFs. I talk about that regularly, right? 70% in ETFs. So that last 30% that's used for stocks, which means that you guys are getting really cracked. And so that's why, okay, I'm going ahead and buying some SPY puts. I'm going to get hedge myself a little bit, right? I'm hedged at a 9% correction on 100 grand of the portfolio. You know, that's great. And then if the market does get cracked, I'm going to go long as shit. In April, May, I was 130% long. Okay. By every time that the market's down 5%, I've been doing that for the past, I guess it's been 12 years since I've been trading. I've had that rule for the past 8 years, right? Every time the market's down 5%, I take 5% margin, roll it in there. So I've got a really long time horizon. But all right, Drew, what's up with you today? Give us some stocks, give us some fire. Curious what you're talking about. You look nice and dapper today.
Thank you. I had to dress up for the Benzinga show as always. Let's look at some stocks that I'm making some moves on. Palantir's up. I know we were talking about that a little bit yesterday in the chat. What days do we not talk about Palantir? I got some random stocks we could talk about.
Let's hit Palantir really quick, and then let's try to hit 5 stocks right now.
All right, yeah, let's do it.
There we go.
So
We're doing
Palantir first.
5 stocks. Hold on, wait. Let me get a good voice for you.
Do it. Let's get it.
All right,
First of
5
all,
stocks. Palantir, let's go. I'm getting
First of all, let's get some likes. Yesterday we hit, I think, almost 500 likes before I left. Let's get me back on the show. Come on, Luke's trying to kick me out. He doesn't want to bring me on. They had to force me to get back on here. Let's get more likes. All right, guys, come on. What's going on here? Invite your friends. Right. Palantir. All right, so it's down. It's kind of starting to consolidate. I think it's a pretty solid place to be at. Just like what you guys were talking about. You know, if you look at like the DCF and you like do all that stuff, yeah, you know, they might be getting hurt. Discount some cash flows. But, you know, long term, I think this easily could be a 10x stock in the next 5 years. I'm very bullish on it. It's my biggest position, so that's why I was talking about it. And you know, nothing big is changing, but with, you know, maybe some more government contracts coming in, it only takes 1 or 2 contracts that we've seen to get the stock moving. Oh wait, my mic's over here. I don't know if do I sound better now.
Oh my God, you sound 100 times better.
Okay, yeah, I kind of forgot about that. Oopsies. But yeah, so, you know, 1 government contract, you know, maybe a few corporations coming on, and bam, the stock's going to the moon.
I love that you said that, because I said the exact same thing. This thing is so freaking news sensitive. Anything that happens pops the stock. We need to break out of that 25, 50, 26 range.
Yeah, I mean, do I care? No, I really want this stock to 10x. I want to be the one that's holding it when they flip to, cash flow, or not cash flow positive, but when they're profitable.
Yep.
So, it's definitely something that I'm holding long term, and it's trading pretty low. Everyone talks about this stock when it goes to 35, but how come no one's talking about it when it's at 24? Like, come on, give me a break here. All right, next stock. That's enough.
All right,
Unless
let's
you got
go.
any comments on that.
No, keep going.
Jamia, right, guys? Oh my God, Jamia.
You
hit
did give us this
65.
one early, guys. All right, hold on.
Oh,
We got to run this round of applause for.
Did we already talk about Jamia?
Yes, yeah. You gave us this one a long time ago. You gave us this one, but before the thing ran up.
Yeah,
I'll give you credit. You
thank you.
absolutely did on this show. It was sub $10. You pitched the stock, and then it went to as high as 70.
Yeah.
So, all right, here's a 1-year chart on it.
Yeah.
Where are you at? It's the chart is ugly.
Yeah. Well, first of all, I gotta give you like some big props there, because I have a horrible memory and you have a killer memory. I can't believe you remember that. That was a while ago. So, yeah, this thing, the CEO is like, guys, we might cut back on some revenue because we're going to change up our little product lineup. Everyone's like, okay. And then, the revenue fell, and look what happened. Obviously more stuff is taking on. That was kind of a while ago. The stocks ran up since, but now it's coming back with everything else. So I think a lot of the people that are holding the stock are in it because they see it going up. I don't think that there's a lot of people that understand it and that are very confident. So we got some stuff there, but it's kind of coming back to where it was, just in January. So it's starting to look pretty attractive to add some shares for me. And, very small market cap, right? Just $4 billion. And they deal with North Africa.
You say it's a very small market cap, Drew, but that's how I know you haven't been on the show for very often. Because we get a lot of questions about very small market cap stocks on the show. But all right, keep going.
I'm not talking about like OTC or anything. I'm talking like, the Apples of the world, right? The Amazons, right? This is kind of, it's a big e-commerce play, right? We've seen Topeka, I believe it's called, or I might be butchering that name, or the stock that Peter Thiel is SPACing with it taking public. So they, e-commerce is still hot, right? SE, very big e-commerce play in Asia. Like e-commerce has been hot. Shopify.
What about the Russian one? What's the Russian OZ?
That was a SPAC, right?
Oh shit. OZON. There it is. This is the Russian Amazon one. But all right, so Jumaya, you like this one is what you're getting to.
Yeah, I'm getting to that. I think they've had insane growth. They had one bad quarter, and like I think that's not even really reflected in the stock price right here. This is all just a recent trading down, but I think in the long term it's pretty solid. And the CEOs came out. He's done a little interview recently in the last week or two, and he's obviously very bullish, as any CEO would be, but. And he said some pretty interesting things. So I think it's a good time to get long, maybe start opening a few positions in the Jamia. And then one stock we could talk about next.
Yeah, and I'll go against you a little bit on this one, which is to say I hate picking bottoms, right? I mean, this chart is ugly. Let's zoom it in a little bit, right? We're down from 70 to 38. I would want to see that trend broken before I were to get long it, right? I want to see some nice, pretty green candles, a nice, pretty green upward channel. If I get that, then great. Let's get long the stock. Let's hit this thing. Let's run with it. But I've just lost so much money trying to pick bottoms, right? Thinking, okay, stock's down 50%. I'm not going to lose my ass on it at this point, and then I lose my ass on it. So all right. So you made a long-term pitch. I'm saying I'm saying be careful on it, right? Because you don't know when that bottom's gonna hit.
Yeah, I mean, listen, like if you have shares, I think there's a lot of people that bought shares maybe in the 40 plus range, and you want to start adding, like maybe start picking like 35, 30,
and what's that Peter Thiel SPAC that you just mentioned? Somebody in the chat's asking.
Yeah, so he actually has two. It's Bridgetown, BTWN. Is that, and I butchered the name. I don't think it's called Topeka.
I remember this one.
Let me type it, BTWN.
It's something around there. You're somewhere
very close.
Accurate.
Yeah, it's
BTWN. Chris K coming through in the chat. Shout out Chris K. There's an air horn for Mr. Chris K, our SPAC, and he's saying it's a rumor for Tokopedia.
Yeah, Tokopedia.
I don't know. Maybe that's it. taking it public, but not for certain.
Yep.
This
It's a
company's
rumor.
also exploring an IPO. Okay.
Yeah, so I think we're just seeing a lot of hype around foreign e-commerce, right? Which is pretty big. And Africa is its whole own thing, right? We see a lot of investment coming from China actually in Africa. A lot of ports being built, and it's huge interstate or continental, whatever you want to call it, highway. That would be insane, right? So that it's almost like an infrastructure play. Speaking about infrastructure plays,
wait, but let's talk about this one. You didn't even mean to bring this one up, but this BTWN is actually sort of interesting. So here's 1 month chart on this stock, right? You again, this is the SPAC that's rumored for Tokopedia, I think is how you say it. They're also exploring IPO, but the thing's only at $11. Right. So your max risk here, if they don't get a deal done, is $1. It seems like the risk to reward ratio here is decent. You are gonna have to wait for a while, right? It's not like this is a 1 week swinger where a week from now you're smashing the air horn and going, hell yeah, we hit it. Right. It's probably gonna be a while before a deal's done, especially if they are exploring an IPO and want to go through that process. But I mean, I think that the risk reward at this $11 level is interesting. Let's see if Chris Catchy. Chris, guys, if you don't know him, he is our resident SPAC expert here at Benzinga. So maybe he has an opinion. Oh shoot, I've got a 1 o'clock call with Nicole. Let's just bring Nicole on for a second. All right, Nicole, you're live on the Power Hour.
We can't hear her.
All right, we'll call her back. Okay. All right, we'll call you back, Nicole. Thanks for joining.
Actually have a caller coming in soon.
All right.
Okay.
She said, she wasn't having it. But all right.
A little bit.
So there's that one. All right, Drew, keep going.
All right, I don't know how many we're in at this point, but I had a list on my phone. Sorry, I keep doing. Oh yeah, we're talking about infrastructure, right? No one, I think, in this chat, prove me wrong. Hit me with 3 likes if you know this stock. Trimble.
3 likes. Come on. Run that thing up. Let's run it up, baby. What is it? TRMB. Tremble. That's Tango, Romeo, Mike, Bravo. Right. Producer AB is going to throw that one in the chat. All right. Hit us
on
with
a 1 year. Throw us on like a 6 month or a 1 year, maybe.
All right. Here's a 1 year chart.
Look how beautiful that is. This is almost, hardware, software, whatever you want to call it. They do a little bit of both. And they're not getting beat up at all during this rundown, which is insane. So they do a lot of infrastructure, a lot of CAD. Building infrastructure management, BIM software. If you're familiar with it, I was not before.
It's a software play.
It's software and hardware, so they do a lot. So they're helping out farmers. They're building, huge roads. They're building bridges. They're building skyscrapers, but all like via software, right? They're not actually building it. They're like helping architects and those people model it. And like they're kind of a competitor to Autodesk. And if you look at what they're trading at, it's ridiculously cheap, right? They have like a 30 PE. They have some really solid numbers. They had, 2020, like Q4 was not the best quarter for them, but their stock is still moving up, right?
And when do they report that? Let's see if we can find this, what the chart did. So it's 210. So February 10th is when they reported that. Thank you, Benzinga pro.benzinga.com, 2-week 3 trial. Got to plug it. We'll never pass up an opportunity to plug. All right, but if we're looking at February 10th here, yeah, look at that. So it didn't even really move off of earnings. All right, so this one's interesting. Time horizon on this one, catalysts on this one. Is it just like that nice slow grind upward, or what are we looking for?
Yeah, so I think if Biden, Trump said he's going to invest in infrastructure, nothing really happened. Biden says he's going to invest in infrastructure. Like we haven't seen anything really come out big. And I'm not a huge political guy, but I haven't heard anything yet. If it happens, which I think it could, but like we'll see, this thing will take off. I really think this thing will do extremely well. And like we were just talking about with the commodities, infrastructure is kind of up there as well.
Okay, all right. And before Jason jumps into the cut here, you're letting the tickers fly. Give us one more.
One more. Oh gosh.
And somebody's asking dividend on this stock. That's a good question.
I don't think there's a dividend.
I'm checking.
But
That's what
definitely double check.
For.
That's
no
what
dividend, guys. Blank ass dividend. All right. Anything? What? Drew? One more, Drewski.
Hey, I actually do have a caller on the line with the ticker.
All right, let's take it. It's Drew versus the caller. Let's go.
All right. Here we go.
Head to head.
Hey, Rich, you are live on the Power Hour.
All right, thank you, buddy. Hey, thanks for having me, Luke.
Luke's not here, but
Yep. Can you talk louder into your mic?
Yeah, Luke, can you hear me now?
Yeah, Luke's not here now. It's Aaron and Jason.
All right, Luke's back.
Oh, Luke's back.
Yep,
Luke's
yep,
back.
I can hear.
So, Aaron, the ticker I got is super solid. It's undervalued by the book. The ticker is SYPR, Sergeant, Yankee, Patriot, Ranger. The company is solid by the book. Their float is 11 million. Outstanding shares are 21 million shares. Market cap is 76 million. And their sales are 83 million with the income of 2 million. So they're making a profit. Now they're a subcontractor for Lockheed Martin. They're in the arms industry, also in the energy industry as well. Also making farming equipment. I mean, these guys are really big. Looking at the daily chart now, full disclosure, I am a bag holder.
There we go. See, I love that the full disclosure isn't I'm in the stock. The full disclosure is I'm a bag holder. All right, that gets your cash register right there. Okay, keep going.
I'm gonna average down on it. You know, I just gotta take some.
So I mean the ratios, the numbers seem good. Let me ask you some follow-up questions. Are the financials increasing? Yeah, like are they making more revenue, more net income?
Yes, they are. So what made me buy this stock now? I broke rules buying this stock. So they recently, let me go to the news real quick. The news was Cypress Solutions stock nearly doubles in heavy volume. Okay, no, this was after the PR. Cypress wins defense contractor award. Now, if you read the PR, it basically says the program is designed to meet the needs of the U.S. Navy and the Air Force warfighter. The missile system employs precision routing and guidance day or night in all weather conditions. I mean, I could read the whole PR for you guys, but they're contracting with the DoD. These guys have been in business for a while. Their websites are
Luke,
solid.
people in chat are saying they can't hear.
Oh, really?
Yeah, it says no volume over the line. Can't hear a word. I don't think it's
Mr.
getting...
Rohan, that's disappointing, man. I can hear, yeah. Ticker SYPR is what we're talking about. Bummer.
It's partly because Aaron Bree was touching his microphone thing, and that was causing a bunch of the issues.
Don't touch Aaron. Don't touch it.
Yeah. And so
how the hell did Neil get here is what I'm wondering. But
and he's very low, the volume. Yeah, it's low. I don't know what it is. But what was the ticker, Luke?
SYPR.
So just pulled up.
Sierra Yankee Papa Romeo.
Summarize. Yeah. So what would you say on this one?
So I mean, it's interesting. The ratios sound really good. I want to know if the financials are getting better or worse, right? Are they making more money or less money over time? And then I also want to know what the catalyst is, right? What should we be looking out for? What's next? What's going to get this thing cooking?
The catalyst is they're going to be announcing the agreement on how much money they're going to get from the contract from the DoD, including the U.S. Air Force and the Navy.
Okay. All right. I like it, man. Well, I appreciate you calling in. I know that the chat's saying that they're having a hard time hearing, so we might have to cut this one short.
What's a market cap?
Idea. Market cap 31 million. Small stock. It is major exchange listed. It's on the Nasdaq. And it does look like it has some decent liquidity. I mean, the thing trades many times a day. So,
Luke, I think you should answer the question for folks that couldn't hear. So it was, what was the catalyst was the question that you asked. And then the caller said that we're looking for Department of Defense confirmation.
Yep. There we go.
With the Air Force and Navy.
Air Force and Navy specifically.
All right. There it is. All right. A new ticker that we don't know about.
For your time.
No problem.
All right, thank you. I love it. That's what it's about, baby.
So I know we have the CEO of EXPI Realty coming on, and let
me just hit the chat challenge real quick, Jason. And
well, don't hit it yet, though.
Oh, okay. Oh yeah. You're right.
Hold on, I got you.
You got me.
Okay, we're gonna hit the chat challenge. Benzinga chat challenge. Here we go. Power Hour, ZingerNation. Are you out there? Let's go.
ZingerNation is going head to head every single week. What is the best performing stock of the week going to be? There it is. There's the dancing. There's the music. Chat challenge time, guys. Every Monday, we're asking you for who we're trying to figure out who's the best stock picker, right? Different question every week. Winner gets this week. We'll do a Benzinga Pro. We'll do a Benzinga Pro giveaway. It's always the most requested. Question this week, coming off some market volatility. What is this price of SPY going to be on Friday? We've got 1 day left in this thing. Scrolling through the names here. If I'm scrolling past you, that means you are not winning, but you do have another day. All right. All right. Keep it going. Keep it going. There it is. Jimmy Hoffer, Jimmy Hofer. I don't know how you say it, but Jimmy, you are winning the chat challenge right now. Your guess at SPY will be at 374 at this time on Friday. We're at 377 right now. There we go. There's the round of applause. Run it up, baby. That's what I'm talking about. So again, Jimmy, you are winning, but you got to hold on to that lead for a whole nother day. We'll see what happens. But we've got some other close guesses in here. We've got some people who went crazy. A lot of 420.69s. I can respect that. I mean, that's always a good number to put it at. But we got a lot of people within 2% of this thing. So, guys, check back tomorrow. If you missed the challenge, you want to compete, you're competitive, you want to win some good free shit, smash that subscribe button. Come hang out with us. You missed it this Monday, but you'll be back at it next Monday.
And Luke, I don't know, like, Luke, I know Luke, if you need to go, I can take it over.
I got to go. Peace out, guys. Happy trading. Be back at it tomorrow. We'll let the ideas fly. Jason and Drew, you guys run it up.
Yep. So let me ask Drew a question. Hey, Drew.
How we doing?
Stop touching that mic thing. I mean, what is your problem?
I moved my desk down.
Okay, but you're like touching it like, I don't know, it's like almost inappropriately, okay?
Oh, yeah, I'll stop.
Yeah, you're massaging it and all this stuff. So I don't know. Neil's shaking his finger at you.
Hands up. Hands up.
Don't touch it that much.
So I would bet, guys, I don't have stats on this, Neil and Drew. I would bet 95% of people don't hedge their portfolio at all.
I don't.
Yeah. So, and here's the problem when you hedge your portfolio. You start seeing, okay, let's just say Tesla starts going up by 40 points. Your hedge goes down so much. I mean, I was down so much on rocket call options, and then it took off. So I'm, was able to make money on them. But the hedge is meant to be protection, just like you guys buy insurance on your house or your car. But do you get in a car accident? And if you don't get a car accident, are you mad that you're paying your insurance fee? And so there's a lot of ways, and Bill Big D has different ways to do it. I buy some puts. There's also leverage ETFs where you could buy that are short the QQQ or short the market. It's just, I know when the market goes straight up, you don't want to buy those. But you see when the market goes down, you're taking a beating. So like I just had a guy screenshot me his portfolio. He showed me a screenshot from the January 5th or January 10th, and then he showed me today. So he said he had $1 million January 10th. He now has 700,000. So 300,000 gone, wiped away, which I understand it, right? I mean, I get it because
he's probably had a bunch of tech. That sounds like my portfolio is not that big, but that's about commensurate to the way mine got impacted.
So about 30%, right?
Yeah.
Yeah. And it's going to happen to a lot of people. And listen, I took a hit on some stuff that I didn't hedge appropriately for sure. I took some stuff off. So I started selling Tesla like at 870, but let's say I had 1,000 shares. I sold 5% of the position, right? So not enough. So over the long term, like you say, stocks always go up, but some of these tech plays, AQMS, it's a battery company. Lithium was at 24. Penn, Rocket. I mean, all these stocks were moving up, and so you take some off, and then you buy on weakness. I think the weakness is over. No, I don't think the weakness is over yet. I don't. But I can't call macro stock market movements. I can't tell you for sure if the market's up or down tomorrow. On Monday, we had a huge rally. Could we have a huge rally today before the close? Sure. I mean, like it's just hard. No, you can't. You're saying?
I mean, anything can always happen, but I think that we're going to enter a short-term bearish trend for SPY, and particularly also for QQQ. It just has to get resolved. We talked about this morning. We had a top. We had a top, and we just have to resolve the downward trend before we return to the broader upward trend.
Now,
for both of those.
are you saying this from a technical perspective, or you just feel this in your head?
No, technical, purely technical. We
Okay,
both of those index based ETFs, QQQ being Nasdaq, which is like your FANG stocks, which has carried a lot of people to new heights through 2020, and then SPY, which is a more balanced collection, but still heavily weighted toward those big tech heavy hitters. Both formed a head and shoulders top, which is a reversal pattern.
Got it.
So we talked about it. And that's just got to resolve. But what didn't have a top when you're talking about sector-based ETFs is financials, XLF, and then energy, XLE. Both of those are going this way, while the other two are, the previous two, QQQ and SPY, are going down. So what you can do is you can stay in those stocks that you've been in that have taken you to prosperity. I wouldn't expect them to have the same upward slope that they've had, but you can stay in them if you're long term, which arguably you should be. Like, this is America, don't bet against America, Warren Buffett. They'll return to an upward trend. You can hedge, and someone did ask, like, I don't understand hedging. Really, it's just buying puts on your holdings, buying put options that are out there, like out there. If you can get something like 3 months or more out, so that as your holdings go down, your stock holdings go down, the value of that put option contract goes up. So you can sell that to make up for your losses. So you're basically kind of stay flat during the period. But what I've done is move out of my stocks that are in the QQQ, out of tech, move out of it with everyone else because they need to resolve that head and shoulders top, and then gotten into dirty energy like oil and financials like the banks, the ETFs that are based on those, because those are diverging.
Okay.
So before can I get an amen if you guys see it?
No.
If you guys see it, can I get an amen?
I don't know what you're talking about. I gotta do this first though. Hold on. Hopefully it works. Okay, that's for Pam. Pam made money. Why doesn't this thing stop? All right. Pam made money with Benzinga Pro this week. With Marvel, she's so happy. You're talking about this. I bought puts on Marvel after earnings were bad, and I saw the news on Benzinga and made money this week. So Pam, you got a cha-ching. She bought puts, like Neil was alluding to. There's also ETFs. You can, if you go on Benzinga and type in bearish ETFs, or Google, hedging your portfolio space Benzinga, you'll see a bunch of different, stories like that and hedges that you can put in place. The advantage is you don't know if the market's going to go down another 1,000 points. You don't know. And so a hedge lets you protect yourself a bit. And that's kind of where I use it a little bit.
You have to do it. Listen to Uncle Raz on this one. And it's not as hard as it might seem. It seems like a big highfalutin finance term, but anybody with an account, I don't care if you have a $100 Robinhood account, can hedge. And right now the market is screaming, set up a hedge.
Yeah, and you can always protect yourself, because I know the majority of you are going to be long, which makes sense because the market was going way up. So what would you want to say, Aaron? I didn't let you talk. Go ahead, buddy.
Me or Aaron?
Drew. Sorry, I called you Aaron.
No worries. Yeah, I was just saying, like, with the whole, interest rate stuff going on, like, we really just do not know, kind of, connecting the fundamentals to the technicals here. We don't know how long this thing's going to go down. So I also got a question for Neil. Do you plan to move back into tech, or are you going to hold, financials and oil?
I'll do whatever has the higher percentage growth over time. So for me, it's just basic statistics. It's a number over time. Whichever one has the more accelerating slope over a consistent period of time, the better trend I'll switch back into. We've hit a wall with tech, and people have rotated into commodities, and so that's where I'm at. And then when it rotates back into tech is always volatile. Nasdaq is like the crazy, wild younger brother to SPY. So it's always volatile, but over time it will grow more. So I expect to go back there eventually. And one thing people are asking about Solar Edge. Solar Edge was brought up earlier as a double bottom pattern. It got sold off. People are not interested right now From an investing perspective, right now, people are not into clean energy. It's dirty energy that's showing the growth. So I got stopped out of my Solar Edge holdings.
Okay, so two things, guys. In the chat right now, if you guys have ETFs that you like that are bearish market, share your best ETFs that you like that are bearish the market. We can give you a list, but I know there are 700 people here right now. You guys have ETFs that you like that are bearish the market. You can do the triple leverage. You can look direction. There's a lot. So let's surface some of them. So now we have a pretty big company coming on board in a minute.
Yeah, I gotta go.
Where are you going?
I got on the show to get Luke's attention because I need to talk to him.
Oh,
but I can stick around for a few minutes if you have something else.
Did Andrew follow up on the thing I sent out about those email addresses that I got? You guys, I shared with you guys.
Was it for folks that won the Benzinga Pro Comp?
No. It was the thing I forwarded you guys.
I'm still working through all of my emails. I haven't gotten
Really?
to. Yeah, I get almost 1,000 emails a day.
Wow. No, you don't.
True. Yeah.
Well, then you're not using good filters. I do the too, but there's only some you need. You know, you're not looking at 1,000.
No, I'm not. I mean, no.
I mean, that'd be crazy. So, okay, so you're gonna go before we bring on CEO, I know, right? Because we're bringing on Glenn in a little bit. I know some people made some comments about selling the stock, and I'm gonna, it's bringing it down. The stock, Drew, went from 52-week high 54 to at 44. Just had a stock split. EXPI World Holdings market cap 6.3 billion. What do you think?
What's the ticker on that?
Oh my God, Drew, EXPI. EXPI, Drew.
EXPI.
Come on.
Yeah. All right.
He's here. So in a couple of minutes coming on board. And so he's here. So this is a great I sent this one over because it's a great company. I mean, the real estate industry is changing. And I think that people will be very interested to hear the story about how the industry is changing and how they see the change. They were ahead of the curve. We're here in Michigan. There's like a guy, Mark Z Realty. He set up with them a cloud-based real estate thing and brings the leads in. And there's a whole business. So we're going to have him come on in a couple minutes, I think. But Neil, two more things before you go. So I know you're looking at technicals, and do you ever change and go to the fundamentals, or are you always going to go with the technicals? Is that always what you're going to do?
I do both. So for long-term holdings, I'm interested in the fundamentals to an extent. So like for ETFs, I'm less interested in fundamentals because ETFs are based on purely what's happening in market breadth. So what sectors of the market are outperforming the rest of the market? Those are the ETFs I want to hold and not look at and worry about overnight. For stocks this is like 15% of my portfolio, where there's a story where I want to own the next Amazon type thing. Like a Shopify is an example. Shopify, I understood. I used the tool. I understood where it fit into the Amazon ecosystem, and that they were trying to branch out from that. I understood the story. That was fundamentals for me, but I didn't dive deep into any like true fundamentals. Like I didn't care about their management. I didn't care about their balance sheet or anything like that. I understood their proposition, and I knew that the value was there and that they were the player that had enough investors that they had already done the due diligence for me. I don't have time because I'm not here to fall in love with the stock. They're just all it is numbers going up, and I want to make sure that I've got numbers going up all the time.
And you started as a technicals. You were never never trained fundamentals.
Never true fundamentals. No. And I've taken accounting and finance and stuff like that in school, so I know how to read a balance sheet, all that kind of stuff. I just don't do it. It's too slow it's not my style.
Yeah. In your MBA, I don't think they taught you technical analysis, did they?
They did it, and I probably would have gotten more out of my money had they.
All right, you gotta redo the schooling system.
Yeah.
All right, are you out of here?
Yeah, I'm out. Thanks for having me on, guys.
Yeah, thanks for coming by. Good luck. Yep.
Thanks.
All right. So, Drew, I think you're heading out, but let me do this. We're gonna bring our guest on early because he's here. So hold on, I gotta go to my themes. What'd you say?
Shall I head out?
Yeah, you could head out if you have any questions. Pop back in, but Okay.
All right. Take care. Thanks for having me on the show.
Yep. Absolutely. All right. Glenn, are you here?
I am here, Jason.
We got our little special guest intro. Where are you based out of?
I am right up on the northwest corner of Washington State. So I'm literally looking at Canada from where I sit at the moment.
So that's funny. You and I are very similar. I'm looking at Canada, but all the way from Detroit. So we're north of Canada, of Windsor. It's like the only place where there's a border, and we're north of Canada. It's pretty crazy.
Oh, I can technically look south and see Canada here because Vancouver Island actually goes south from here. So it dips back down behind me.
Oh, you're all the way by there. So what time is it over there right now?
It's 10:26 a.m.
Yeah, you're 3 hours behind. Have you always lived over there?
I have. Yeah, it makes it tough for market hours, though.
Yeah, that's what I was going to say. So, I mean, are you go to bed early, get up early guy?
I do. I go to bed about 8:30, 9 at night, and then get up about 5:30 typically.
So were you mad back in the day when the TV shows were always late, or the sporting events, and you never got to see the ending of the sporting event?
Well, I did a bit, but it wasn't. I was more of a sports guy where I actually did sports than I didn't really like watching it. But now I watch a little bit more sports because I'm getting older.
Got it. Okay. Now you have a awesome company. I've seen interviews, but EXP World Holdings, EXPI. What would you describe? I mean, I described it a bit, but what would you say the core of your business is?
Yeah, we're the first nationwide residential real estate brokerage that runs without any physical offices for our agents and brokers, or we have the minimum amount that's required by real estate license law. And so we did that in 2009, quite frankly, because I couldn't afford offices after the housing downturn. But I also came out of technology. So I'd worked for AOL at one point. I built an online service back in the day. I launched an e-commerce logistics company just before the .com collapse. So I'm a bit of a technology geek. And with that, plus combined with residential real estate, which I got into in 2002 as an agent and learned the whole business, just recognized that we could build a different type of residential real estate brokerage model given where technology had come to in 2009. So we launched then, 24 agents. We're now 47,000 plus agents and brokers. We're now in 13 countries. Now we've expanded, quite a bit. Most of them are still here in the United States. We're 40,000 plus US based. And then we've got a few thousand internationally, but, expanding all over the world. Pretty cool value prop too, because our agents and brokers can actually recruit other agents and brokers and actually get paid benefits from recruiting agents. So we've got kind of a comp plan that actually allows them to be our sales force to bring more agents in. And that actually translates across borders as well. So somebody can bring somebody in India or Brazil or Mexico or Canada or vice versa, and they can get paid for introducing people to the EXP opportunity.
Yep, and we're gonna go over that now. On the international expansion, when did you start going to other countries?
Well, Canada, of course, we went to quite a number of years ago, just because it's our northern neighbor. But in 2019, we opened up the UK and Australia, and then last year, early in the year, we brought over a gentleman named Michael Valdez, who ran all of international for Realty. And so he joined us, and then he opened up 4 or 5 countries just in the fourth quarter. A bunch of new countries have already opened up this quarter. So he's a very aggressive international expansion plan, and that's really where most of our near-term investments are taking place, is just to get all that infrastructure in so we can hit his growth targets.
So how many years have you guys been doing this for?
11 and a half. Started in 2009 and started with 24 agents. Even this year we got to 41,300 and change beginning of the year. Even since then, we've added another almost 6,000 agents. I think we're at 47,000 plus today. So just over 2 months, we've added quite a number of agents to the platform worldwide.
And we're gonna go to your growth story and how the model works. But right before you started this, what were you doing before before EXP?
Yeah, so I ran a boutique real estate brokerage called Buyer Tours Realty. We had 4 offices, and so I did that from 2007 to 2009. And prior to that, I was an agent at Keller Williams, ran 6 real estate teams, and then prior to that, started at Prudential, and then prior to that, I was in technology startups. So I did a number of technology startups in the late 90s and early 2000s.
Got it. And so when you like you and a few others had this model like, hey, we should change that game a little bit. It was early 2000s, and I don't know if it was you had another mentor that you were working with, but there was something you wanted to change the game. And it was like, I don't know if you had this huge vision what it is today, but like, what were those early days like when you got this thing going back in 2000 and early, it looks like 2000, like
EXP was 2009 was the EXP portion. So what ended up happening is I learned all the pain points that I recognized. And so I'm being an entrepreneur, a business guy, I saw this residential real estate business that sold as a business to real estate agents, that they own a business, but it's really a business that owns them. And so there's really no retirement plan in residential real estate. I went to Keller Williams because there was a little bit of a quasi retirement plan there. So I thought that was cool. It didn't work out to be as good as sort of the marketing brochure suggested. So that's why I eventually went independent. But I just took notes on, if I ever had a chance to do the business again, here are the things that we would do. And so there's a few of us kind of would bounce ideas off each other. And it was really the backdrop of 2008, 2009, that housing market crash that gave us a sort of a clean sheet of paper to take everything we learned and actually build this new model, because our old model just wasn't working. We couldn't afford offices. Transactions were 25%, 30% of the sales volume that we were just a couple of years prior. And so for us, we just said, hey, what are all the pain points for real agents, for people leading teams, for broker owners? There's 2 million licensees in the United States. And we said, with that many licensees in the United States, we ought to be able to attract a number of people to our platform by solving their biggest pain points in being in the business.
Got it. Make sure I'm on. Okay. And so this model that you had was definitely not where the industry was at. I mean, this was in hindsight, it makes sense. But this was not where the industry was at back then. And so did you get a lot of pushback from the traditional real estate brokers?
Oh, tons of pushback. They said it would never work, that that you needed an office to actually run a real estate brokerage. Once we became a public company, they were looking at they'd take our financials, because we were showing some losses for a number of years as a public company. And they said, yeah, this company will never make money. They made all kinds of fun of us, but we were attracting agents the whole time. Like, we never had a month where we had fewer agents than we had the month before. So we've grown from month one. We grew 50% year over year. And then 2013, 2014, we introduced some agent ownership initiatives. That's why we became a public company. And then our growth rate really took off. Then we started to grow 100% year over year, close to 200% year over year for a couple of years there. And so even last year we had, even though it wasn't 100%, it was still the denominator or the numerator. Anyway, one of those numbers was really big. And as a result, we still grew 60-something% our agent base in it was kind of a strange year for real estate, just given the pandemic and everything going on.
Did companies like Realty try to come and buy you guys?
No, they didn't. I was actually kind of surprised that some of these bigger companies didn't make inquiries, but I also recognized why they couldn't either. A cloud-based residential real estate brokerage would effectively cannibalize the franchise organizations, because they generate their 6% franchise fees, and the local broker owner has to charge 70-30 or 60-40. So they have, and if this new model came in, and we're an 80-20 model, so meaning agents get 80%, the brokerage gets 20, and we don't charge a franchise fee, that, agents would gravitate toward our model if it was owned by the same parent company as, say, Century 21, Coldwell Banker, or maybe Remax or whoever. So the franchisees would cry foul, and we saw it happen a couple times where Gary Keller tried to do this kind of similar kind of thing where he was going to try to create a virtual brokerage. And from what I understand, some regional owners and franchisees basically threatened or did sue him to stop him from doing that because it would hurt what they had invested in.
Yep. I got so we're with Glenn Sanford, EXP World Holdings, EXP Realty. Okay, so then the next question is, you also in 2014, when you said your growth started to ignite, you also gave stock to, you made like an ESOP, a stock ownership plan for new hires or new agents. Is that correct?
Yeah, it is. It's really interesting. We went into 2014 with this whole idea of creating basically something akin to an ESOP plan. The challenge is that ESOPs only work for employees, W-2 employees, and so there isn't a analog for that for independent contractors. So we had to work with legal and work with a bunch of folks. And I said, this is what I want. This is what I want. We had to go through a lot of iterations to come up with a model that would actually work. So we probably took us the better part of 6 to 9 months, trying to come up with the right mental frameworks and the right what have you. But late 2014, we introduced the agent ownership initiatives. And basically, agents get a token amount of stock for their first transaction. Now it's $200 worth of stock. They get $400 worth of stock if they pay us a full $16,000, which is what we refer to as their cap, the most that they'll pay us in any given year that they're with us. And then we introduced, if they brought another agent to the company, they get $400 worth of stock, as long as that agent and the person that brought him in stayed with the company for a minimum of 3 additional years. So all this stuff was kind of on a 3-year vesting program. So it created some golden handcuffs for our agents to want to stay with us. And then I think we introduced in 2015 the ability for agents to actually take 5% of their commissions and effectively get stock at that time was a 20% discount to market, but now it's a 10% discount to market. So they now have this additional ability to sort of build up an equity in the company. And then for our really, really top producers, they can actually get back their whole $16,000 in the form of equity. Some of it vests immediately, some of it takes 3 years to vest, but it's a really cool platform. And we've literally, had agents become millionaires just from the equity side of participating over and above their real estate production.
I mean, that's amazing. I mean, seems like an accounting nightmare to the 16,000 and have it transferred to stock. I mean, that seems like a nightmare, but you're able to do it somehow.
That's why you got computers. It's not people sitting in the background doing these calculations. It's all programmatic. We've built this whole platform called Enterprise that we have. It literally does all these calculations in real time. Took a while to get all the bugs worked out, but it works. It works well, and we've got a pretty good size technology team that just makes sure everything works. But now we've actually got it working not just in the United States, but now works in all 13 countries that we operate in. So it does currency conversion.
Wow.
Each country has a slightly different version of that plan. It's all programmatic. It all just happens automatically.
Yeah, like I'm sitting here thinking, like, if I'm an agent, why wouldn't I do that? Why wouldn't I do this model? But I'm gonna take it even further back. So if I was, I don't know, I take the real estate class, get my real estate license. Would I go to another like a EXP brokerage that's here in Michigan, or would I go start my own? Like, how does that part work?
Yeah, so if you just got your license, so you can go sit for your exam, you get your license. You need to put your license with someone. You need to put it with a brokerage, and you would go. So you may meet an agent, maybe talk to the managing broker, and you go, "Hey, this EXP thing really makes sense to me." Then you'll actually put your license there. We got new agent training. We got some mentor programs. We'll help you be productive. Lots of Anyway, but there's about 100 hours of training that takes place in our cloud campus every week. And then just with the camaraderie and the community, we really talk about this whole idea of compensation, community, and cloud-based. And that's kind of the 3 C's of EXP Realty that makes it, so unique, as we've kind of created this unique ecosystem, and new agents can thrive really well in that model.
Yep. And your stock, I mean, it's risen over the last several years, like 1,000%.
Yeah. Don't look today.
I know. I know, down 16. But and listen, I mean, I don't think you operated your business by looking at the stock on a daily basis.
No, it's very much of a long game for me. I mean, we're playing the game to win worldwide, and we're really playing this game, to be in our opinion, we believe that we have the potential to be the single largest real estate brokerage on the planet at some point. So it's pretty ambitious. I mean, we've got some big goals.
So let's say, I start a brokerage, you have this 80-20 thing. So the 80%, how does it work? Like, how does the 80-20 thing?
Yeah. So out of a commission, you would receive 80% as the agent for any of the listings or buyers that you represent that come to a closed transaction. 20% of that would come back to EXP Realty up until you've paid in any given year $16,000. So on that 20%, and then you go to 100% for the balance of the year. So for the balance of the year. So if you sell a lot of property, your effective split might be 80, might be 90% or whatever, just because of the way it sort of averages out. But and then you get some equity awards and some other things from just your normal production. So those are the other benefits that come along with that. Yep. But you're out there listing and selling like any other brokerage out there. You're going out to visit with sellers. You're working with buyers. You're potentially driving around in your car, or they're following you to different properties that you and they think might be interesting. You're opening them up. You're helping them with that, all of the paperwork, and it's really, real estate agency is about managing emotions too, because these are big purchases for a lot of people, and they don't understand this. They don't do this every day, and so having a trusted professional help them through the process, and that's what a real estate agent is.
Yep, and it seems like you've kept that $16,000 number for a few years. Are you guys ever going to change that number, or what do you look at that as?
No, it's been there since 2009. So it's been, we literally, we really think we nailed the model day one. Now that doesn't mean that we couldn't change it at some point, but in all likelihood, it wouldn't go up. So just so, a lot of people and when I talk to investors, they go, well, is there any way to maybe raise that number or raise your monthly fee? And I get that question from investors all the time. But we also work in a very competitive industry. I mean, there are other companies that have different models that might be similar, maybe a little bit less expensive, what have you. And so we're really clear that, this is our model. We think it's sustainable over the long haul. And so that's just the way it kind of works.
And with that model, then so the 80-20 part, then how like if I'm a real estate and I work at whatever an EXP place, me as a real estate agent, can I recruit other real estate agents and make a cut off them or anything like that?
Yeah, that's what we refer to as our revenue share model. So Keller Williams introduced or really pioneered what they referred to as the profit share model, and we actually took their model and just made it better. And we call it our revenue share model. And you can actually earn income off of agents you bring in while they're paying in their $16,000 cap. If those agents bring in other agents, you can actually earn some income off of that. So you actually get to basically build a business in the business just by attracting agents. And we literally have, a fair number of agents, probably in the dozens of agents that are making full-time income just from the benefits that they've received from helping the company grow.
Got it. And so it's not just the guy that owns or girl who owns the real estate brokerage. As an agent, I can make money if someone else comes on.
Absolutely. In fact, the EXP Realty itself doesn't technically sort of do the recruiting. We really build the platform for agents to do the recruiting. We'll provide all the support, the back office, the compliance, the training, but the agents are doing all the recruiting for us.
But I'm referring to, like, in Detroit, there's a thing called Mark Z Realty. Mark Z runs an office. But if I'm an agent at Mark Z and I refer someone, can I still get a cut?
Oh yeah, absolutely. And so Mark
go ahead.
Yeah, so Mark runs a team. So he would refer to as a mega icon team in the EXP ecosystem. Yeah. And so he's he's chose to actually have a physical office of his own that he wants to have for his purposes. But the platform itself, agents from his office can recruit anywhere in the world that EXP operates and build a second stream of income.
Got it. And so, because you're not just trying to get any person just to go sign up on EXP, you want them to go join a group, go join an office, basically, or a virtual office. It's not just go sign up on exprealty.com.
Yeah, we don't stop people from doing that, because we do have a lot of people that do come directly to us. But our primary role is to support agents and helping them grow the business. So that's our role, is to do that. And then because we don't really have the infrastructure to support the agents directly that come direct to us. So we'll actually spin those back to our agents that are supporting the growth of EXP.
Yeah, Mark Z, I think, is coming by here this week or next week, by the way. I never met him before, but you must know him, I take it.
Oh, yeah, no, he's a really good guy. You'll enjoy him.
Okay, so we're getting closer to where I'm going. So you guys have grown by this referral network. Now, do you charge the same commissions as like a Keller Williams?
Yeah, so commissions are actually negotiated between listing agent and the seller. So even though commissions, I think on average are about 5.4, 5.5% nationwide, our agents would be in that same range. Like so they might be 3% on the list side, 3% on the buy side, or they might be 2%, 2%. It's really market specific. Some markets have slightly different nuances at the local level, but it's not dictated by the company at all. It's all done in the field by the listing agent in conjunction with the seller. Got it.
And then they're asking in the chat, what do you the stock split? What were you thinking there on the split, and why'd you guys do it when you did it?
Yeah, so I think we announced that the stock was like $70 or so a share, something like that. Because if you think about our first real estate transaction that agents do each year, they get $200 worth of stock. And when the stock's like, let's just say $10, well, that's 20 shares. That's 79 going on potentially, some larger number. That's 2 shares or two and a half shares. So we wanted to make the number of shares more meaningful for the various stock awards. So that was really the big purpose for us, was to just make the number of shares more meaningful for agents as they're receiving them, as opposed to it looking, fairly expensive. So if we kept on running, obviously I don't have a crystal ball on the stock, but if it was $200 a share, it'd be kind of weird to only get 1 share of stock.
Yep. I understand that. It just makes sense. And, the market's the market, and it'll follow good companies. So the other question on the stock per se is they're asking about insiders selling. I know you probably have set stock plans. Was there something that was unique or a month ago that, I don't know, just these people are asking me about?
Yeah, no, I've had since last year, I've had a 10b5-1 plan that I've had in place, which is just a regular stock plan. So I've, like this year, just to put it in perspective, I'm selling about 2% of my holdings over the course of a year. So you'll see a little stock go out every week based on whatever the stock's at. And so that's just part of my overall plan. But those are generally the stock sales that are going on right now are all 10b5-1 plans.
Standard setup plans. That's what I thought. Now, are you guys in it? Are you in it? Are you in the title business at all, or?
We do have a title joint venture called Silverline Title and Escrow. So we do, and we've expanded that to quite a number of states. I don't know the exact number, but 15 states or so, where our clients can kind of do that. So we've got that joint venture. We've got a mortgage joint venture called Intralend, which is and so we've been trying to figure out how to make these all attached to the real estate transactions, because if we can crack that code, then as you might imagine, our revenue per transaction goes up dramatically for the brokerage. So we're working on that. We just bought a company last year in July called Showcase IDX, and so we can actually build out our own national portal that eventually, in our minds, will compete with the Zillows, the Redfins, the Realtor.coms.
Wait, what does Showcase IDX do? I'm going to know.
So Showcase IDX is basically a real estate search solution platform. So it was really designed for agents or small brokerages, but they had all of the plumbing and tooling to basically build a national platform. And so we bought them to actually build up our full-on custom website. And so once that all gets built, like later on this year, our goal is to have mortgage and title and some of those other features actually built into that platform.
Got it. That's where I was going with it. They have a lot of stuff with SEO. I see it. Okay. And that's where I was going with that. So you're going to have mortgage title more aligned. I just didn't, because I know real estate and that usually have relationships. Like there's some RESPA, but you have the partnerships properly. And I think you guys are probably old hats at that. So Zillow, you would see is like this Showcase IDX could give you a Zillow type experience.
Correct. Yeah, a Zillow type experience, and then and we've even the iBuyer, the Open Door, the Zillow Offers type of platform. We launched a platform about a little over a year ago called Express Offers, and you can actually see it at expressoffers.com. But it's our answer to the iBuyer. So we've got basically a way for consumers to start to enter their property addresses, get buy offers from buyers who are looking to potentially buy their home, to do the same types of things that Zillow Offers would do, except we're not taking any of the balance sheet risks. So we're actually working with hundreds of buyers on the back end who are looking to actually buy properties in lots of markets around the U.S.
So when I look at this, do you see the screen up right now?
I do. Mm-hmm.
So what happens? I put my house in, and what happens?
Yeah. So if you're in a market where Express Offers exists, then it's going to.
Is it in most markets or no?
It's in about 30 states now, and not all the cities in each state, but we're building that out on a nationwide basis. But if you entered it and it fit what's referred to as a buy box of one of our buyers, then they would make an instant offer to you on that property. It would also go to one of our EXP Realty agents who would actually present that offer to you, and then also describe what a fully marketed listing might bring you instead. So you'll get the best of both worlds. You'll get to see, if I go this way, here's what it is. If I go fully marketed, then this is what it is. And generally speaking, a fully marketed listing is going to net a seller significantly more. We did the math on like Zillow, and the average consumer's spending about 11.4% versus about 5.4% in using an agent on a real estate transaction. So we want to just be in there. We've got we're generating some lead funnels for agents, and they're able to then use this to generate listing leads to go potentially have EXP Realty signs out in the ground.
Yeah, that's where I was going to go. So I see you're not in Michigan, so I guess I'm not listing my house right now. Any reason why you're not in Michigan? Is it like
well, it's just we're obviously EXP Realty's in Michigan,
of course,
but Express Offers just hasn't. We just don't have any buyers on the back end in Michigan yet. As soon as we do, we'll pop that back up, and you'll be able to, if you wanted to instantly sell your home, you'll be able to find out what an offer might be.
So that's good. So when you say buyers, is it investors that are like looking for discounted homes for these express offer type things?
Could be investors, could be anybody who's looking to buy a large number of homes. I mean, we work with some of the buyers are literally buying for their rental inventory, and they own thousands and thousands of homes, and so they're in there making offers on homes. But some of them are looking at fix and flip. We work with one company, Wedgwood, which is the largest fix and flip company in the nation. So from that perspective, they're going to take all that scratch and dent inventory and make offers against them because that's their sweet spot.
Got it. And so the reason I bring that up, because like when I see that, express offers, I'm thinking it's just a lead gen tool, get my info, and then I want to sell my house. That's what I was thinking. But there are actual buyers on it, etc.
Oh yeah. We've got hundreds of buyers, and I mentioned Wedgwood just as one.
Yep.
But they buy like 6,000 homes a year.
Got it. No, that's amazing. So you have, this is a nice tool. And then you bought Success Magazine. What was the thinking there? Is that to educate the realtors on how to grow their business? And what was the reason to buy that?
Yeah, a couple of things. One, we were already mailing the magazine to all of our agents. So with that, we became the single biggest customer of Success Magazine. And so the owner was looking to sell, and he said, "Hey, would you be interested in buying the magazine?" And I said, "For sure." We got success.com, which is an awesome domain. But the reason why it made sense for me was because we want to make sure that we've got a really good competitive moat for the residential real estate business. And personal development is core to any sales, especially, and real estate sales is right in there. And so by having the longest running personal development brand in the history of personal development, so 125-year brand, it's been around. And Napoleon Hill was an editor, Yog Mandino. I mean, there's just so many people that were involved with this. Tony Robbins has been on the cover like 4 or 5 times. So it's such a iconic brand for anybody who's in sales that it just matches up really well with the idea that, real estate is really what we do, but it's personal development that makes us do it well.
Okay, I'll ask. They keep asking me to ask a question about trends. What are some trends you're seeing in different markets, growth areas, rental areas? I don't know. I mean, you can give a broad thing, but I know it's hot these days, right?
Yeah, I mean, obviously, we're low interest rates drives this the whole engine. As long as we've got low interest rates, we're going to continue to see markets perform really well around the country. As long as the Fed keeps on pumping money in, we got the stimulus package coming in yet again. All this stuff just continues to keep the markets pretty hot. And as long as that goes on, I think the flip side of it is just for us, we're actually designed to be successful in good times and bad times. So if the market starts to take a dump, and real estate offices start to close, well, we're able to actually, because we have no physical offices, we don't have any of that fixed expenses, we can actually do really well in a bad market. So we don't have any of the trapping. So my prediction is that even if we have a really bad market and you see pretty much every real estate brokerage across the board lose money because of their fixed expenses, we'll actually continue to make money because we have almost every one of our expenses is variable based on market conditions.
So at the end of the day, you guys really, I mean, you're trying to compete. I mean, the Keller Williams model and just offer better like cloud-based things, not have to pay as much money, that kind of stuff. Like that's what you're trying to get those guys who would open a Keller Williams office to eventually open an EXP office.
Yeah, I mean that's the game we're playing right now. The big game that we're playing, at least domestically, is we think that Zillow is really the company that we're competing against. So when we think about long term, who are going to be the big players? Well, it's going to be Zillow, Compass, Keller Williams, Redfin, EXP, and maybe there's somebody else in there, but there's Open Door. So those are the 6 players that at the end of the day that I think will sort of win this game at some high level. And when we think about it, who's going to be the one that we really are going after, and that is most likely going to be Zillow, and that's going to be the company that we have to continue to pay attention to and continue to iterate in the short run, so when we get to the end game, we're in a good place to compete against them.
And do you find most of the people that are using like EXP, are they using the app? Are they on the website? How does that work?
Well, right now they're using the website, so we don't have an EXP Realty search app at this point, but that's coming.
That?
Yeah,
Okay.
for sure.
I mean, you've grown so tremendously in the last like year and a half that I've seen. I mean, I've seen videos, and I mean the whole mission of the company. And didn't you get involved? Maybe I'm wrong. I don't want to say it, but Grant Cardone.
Yeah. So I'm actually going to speak at his event end of next week. But
I was actually going to get coffee with him when I was in Florida. I messaged him the night before I was leaving because I'm like, I just thought of it. We were right by his office in Aventura, so we didn't do it. We're going to do it next time. But what's the situation there? Yeah, so Elena Cardone is getting her real estate license. She's putting it with EXP. Grant has already sort of went in, and he's starting to promote that side of things. We've got a little bit of a term sheet. We've been trying to get to some sort of something with Grant, but Grant's Grant. He's like he just keeps he's a mover and hard to tie him down. And
but we're going to put something together with him so that he can be, have a little bit more of a spokesperson role out in the industry, because the guy has, so much social media credentials. It's just crazy the amount of attention he could bring to what we're doing. Not that we haven't been growing already, but he was talking about napalm and kerosene and blowing it up, and so we'll see what that looks like.
Yeah, exactly. You should see some of his club. You know what Clubhouse is? He does these Clubhouse things.
Oh yeah, in fact, that's where he and I met. He and I met on Clubhouse, and then
really?
And then he and I and Tim Story on Sunday night were having a conversation, and so he and I chat are bantering quite a bit on Clubhouse.
That's where, okay, and that's what I do a Clubhouse thing on Friday with this guy Josh Brown. If you ever watch Halftime Report on CNBC, we host a Clubhouse on Fridays at 3:00 every Friday. And so, but that's where I was seeing Grant, and I was right down the street. So next time I'll get with him. But I thought this slide was interesting here. I have a slide up from one of your decks, the brick and mortar, Blockbuster, Circuit City, and Netflix. That's how you guys see yourself. This is what you see.
Yeah, and in addition to that, because we, if you think about, Blockbuster was physically based, Circuit City physically based, traditional real estate brokerages are physically based. Everything's went online. So you think about the whole idea that, you're not going to the rental store. You're probably shopped 2 or 3 times in the last 2 days just on Amazon, and being able to just go into the virtual office just makes a ton of sense in terms of course, in this last year with COVID. I mean, we were so well positioned. I mean, we didn't even miss a beat, other than we had to make some staffing changes in April last year.
Got it. And the last question I'll ask is, someone said the search engine in Canada needs to be improved.
Yeah, they are right. They're absolutely right. There's a lot of stuff that we're sort of somewhat changing out engines and all kinds of stuff on a regular basis while the rocket is in flight. And we just flipped over to the Showcase IDX website as an MVP in Canada back in November, did the same thing in the US, and now we've hired a bunch of engineers to actually go in and now improve that search experience to be first class toward the end of the year.
So all in due time. And this is the last slide about all your partners, 360 Tours. And I mean, it's an exciting story. The growth has been tremendous, and you're using the power of people to refer people to your own business, and makes a lot of sense. I know Mark Z is huge in Detroit, or at least in Michigan.
Yeah, he is. He's a super great guy. So when you do get a chance to chat with him, tell him I said hi.
I will. Anything that I didn't ask, I know I did. This is pretty long, but anything that you want to say about EXP before we head off that I didn't ask? I know there's a lot more questions in the chat, guys. Can't get them all. They keep asking me. Yes, agents can get stock.
Yeah. So and you saw the virtual world piece. I mean, we bought that company Virbela back in 2018, and it's basically where we go to work every day. And so somewhere in there you can see kind of the way that the office setting works. And we have auditoriums with 1,500 people in them, and training rooms and all the trappings of a back office.
You actually go? What do you mean you go in here?
That's you're looking at our world. That's literally how I go to work every day. I go to work as an avatar, and show up in an office, and people come in, walk up to me, say hello. Saves nobody gets Zoom fatigue, which is awesome. And this last year, it's kind of this. We've invested a fair bit into it. But this last year, we've had everybody from Deloitte to PwC to tons of companies, Stanford, UCSD, Arizona State University. I think Google, Microsoft have been in various different campuses for different events. So we've done some really cool stuff with this that's been just a technology that really helps us relative to the pandemic.
Spencer is bad hands. This is awesome. You should be an event company too now. This is software we could use for our Benzinga events business. This is cool. I mean, this is getting together and being virtual, but being together. I'm gonna go play. Can we go play soccer today, Glenn? Let's go.
You can. Yeah, the Virbela. If you go to Virbela.com, you can actually go in and go to the soccer field, and you can start kicking the ball with some friends.
All or some flag football. That's what I do. All right. Well, man, it was great having you on. I know you were on. A lot of the users that we have were asking about to bring your company on. Seeing the growth has been tremendous, and I feel like it's the new way that real estate offices are being assembled with using the cloud-based system. I mean, you got Ring Central, you got Twilio, you got all this stuff. Why not have it cloud-based in real estate? That's how I see it. So we really appreciate you taking the time out of your day to come on and educate us. I know I asked a lot of basic questions on the company, but those were the questions I was getting before. And I think it's good to tell the story and learn about it. And we'll see what happens with Grant Cardone and in the near future.
Awesome. Hey, thanks, Jason. I really appreciate having me on.
Yep. Thanks, Glenn. Have a good day.
You too.
Yep. So that was Glenn Sanford, EXP Realty. EXP Holdings. The company has been growing like crazy. Look at the stock; it's up 1,000% over the last few years, and lots of tools for realtors. I've seen it all over Michigan. Cloud-based real estate system. Spencer Israel, we have to talk to him. So can he turn himself on? You ready, Spencer? So Spencer, you went like this. That means continue, go further. If you want me to end it, you got to go like this, live. Because I thought you're extend it, baby.
Can we go over some basic TV signs right now?
Yeah, what's a sign.
This means wrap it up.
No,
this means stretch. Keep going, stretch. This means wrap it up. Okay,
right, fine.
Okay, we've got the crypto show going right now, and guys, listen up. We figured out a better way. We found a better way. Okay, all of you people who complain about not wanting an all-day stream, and we got to go back to that. Guess what? We're redirecting this stream to the next show. You don't even have to do anything. Okay,
really?
Just sit in your chair or your desk, wherever you're at, and just do nothing. And when this stream ends, the crypto show will start automatically. Okay, it'll redirect you. You don't even have to lift a finger.
Yeah, but Spencer, that is a cool company, and it gives a lot of options for real estate agents. So glad we got to go over it.
Yeah, it was a long interview. We really appreciate it. That was the guy asked a lot of questions, but I want to pivot now to the Benzinga Crypto Show, which is on right now. So everyone, hit that like button, guys. Smash the like for Jason.
Oh, they're asking if I'm buying EXP Realty. I think I may own a small amount, but I'm not making any purchase buy trades right now. I told you guys I kept taking leverage off, and I'm keeping that for a couple days. I'm not making any buys that I know of right now, just so you know.
He knows of keyword. Okay, Jason, I'm going to sign us off this stream, all right?
Make sure you put the link to the crypto show in the chat.
Oh,
yeah.
Don't worry about it, Spencer. Keep going. Don't listen to Luke.
Yeah, I don't know what Luke's talking about. All right, Jason, I'm going to sign us off. Guys, hit the like button. Thank you very much. We'll see you tomorrow. Remember, CEO Fubo on Pre-Market Prep, 9 a.m. Eastern Time tomorrow. But we got some more programming until then.
And tell E-Trade that you want Benzinga news. Contact them. Thank you.
If you want to ask the CEO of Fubo a question, email premarket@benzinga.com and I may ask it. All right, guys, thanks a lot. Ending the stream. Back to the crypto show.